Important news moved the market yesterday. Data shows that this rally may not be over yet. And then let's check out the charts for Bitcoin as well as the weekly closes for our favorite miners, as well as some plays I've been talking about this week. Let's get right into it. Today, stocks end the day higher even as jobs numbers came in exceptionally hot and unemployment dropped. Usually this would send us into a spiral considering the Fed is fighting inflation, and this just says inflation is going to go up. But Jay Powell has come out last meeting, the FOMC meeting, and said that increased unemployment and jobs data will not stop the Fed from cutting rates. So in the face of these numbers that normally would have the market falling, we went higher. So let's take a look at those numbers right now. The jobs that came out yesterday were 303,000 jobs last month when only 205,000 were expected, and the unemployment rate fell down to 3.8% when full employment is, as we all know, 5%. And last month, unemployment was 3.9%, so we fell by 0.1% in the unemployment arena, meaning that inflation is likely heating up. And if you've looked at the chart for US oil lately, which we can look at later, inflation is on the rise when energy is on the rise, and energy is on the rise, so inflation is coming. All right, that was the news. We moved up, we should have moved down. The market is having a staring contest with the Fed, and we are going to find out who blinks first here in the coming months, likely. So this rally might not be over, and there is data that shows it. So first of all, this is the S&P 500 and margin debt balance ratios put against each other. And what we can see here on this chart, if I can get it where I want it on screen, there it is. You can see this red line is the data for the margin debt, and the blue line is the S&P 500. Something that you may notice is that when that red line spikes up dramatically all of a sudden, usually it is followed by a crash in the market. You can see it in 2001, 2007 through, or actually late 2006 through 2008. You can see it was way over from 2010 kind of all the way until 2018 where it came back under again. And then in 2021, we went up with it and then crashed in 2022. And right now we are hovering way down here. This looks a lot like before the great financial crisis, does it not? Even this dip here in the S&P 500, which reflects this dip back here in 2002, 2003, where we came out of it kind of dramatically, went sideways, but up for a little while as that FINRA margin debt slowly crept up until a boiling point, and then we dropped off. So this likely isn't going to end because people and hedge funds are not over leveraged. They don't have that much margin debt in the game right now, meaning no one's really sweating about their positions because they can't be completely wiped out. They're not underwater on anything. And even if they are, it's not on debt. So they don't have anyone really coming after them, right? So it's a lot less stressful when it's not on debt. So this thing probably will see corrections, but I don't think we're going to see an outright dump in the market until we see this red line crawl up dramatically and then drop off also just as dramatically. So that's what we're watching in that respect. And we're going to be watching this very closely. This could take a while. How long did it take down here? I'd say we're probably about here in that sector, 2004, all the way until 2006. So it took 2 years. We could be waiting all the way until 2026 to see this red line catch up and actually put us in an overheated market where things could easily come collapsing down. Now, that doesn't mean that we won't drop 10, 20% or so, but that does mean that our rally could likely continue on without a lot of fear for a big correction, more than average. So the other thing that tells us that the rally is likely to continue going is this right here, and this is the money market fund assets. So how much money is parked in money market funds? Currently, this is the total right here, and this is in billions. So that is $6.1 trillion. 2.4 of that is retail, 3.6 of that being institutional. So this is very high. $6.1 trillion is just sitting on the sidelines waiting to be deployed at the right time. And as you can see, it's growing. Back in March 20th, it was only It was $6.046 trillion. We've moved up by 0.1 or $100 billion, nearly 100 billion. It's more like $70 billion increased in the market and the money market funds since just 2 weeks ago. So it is building up. And if we look here on this chart, this is another representation of that, of the money market fund monitor. This is actually showing us back from January and February, and I have a better way of viewing that right here. We have a nice little ruler, and where was it at in February? It was right here. This one was February. We were at $6.5 trillion. So some of that money has been flowing into the market, and as you know, we had a really good January, we had a huge February, we had a decent March. All 3 of those months were up, and during those 3 months, we had, well, not three, but at least one of those months, we had at least $400 billion from money market funds come back into the market, which is pushing it up and supporting it. So until we get back down to these levels, like 3 trillion or lower on the money market funds, I would say that we are still very likely to have every dip shall be followed by a rip until the money market funds are drained in the future. Okay, so let's take a look at Bitcoin today. Bitcoin is currently at 67,000 right now. At the time of this recording, it's 67,000. It might be different by the time you view it, but we came off of our highs here, 71,000. We're coming down. We bounced right off of my line here at 64,400. Did it twice actually. We came up. These candles actually aren't looking too bad. We had a nice long wick on the bottom of this red candle, indicating some upward pressure. We're currently creating a very small little doji candle there, and we are on a bit of a path up. Now, if we go down below 64,500 again, likely we will come back to visit $60,000. And if we are able to get above 69,000 into the 70,000s, we likely will run for the all-time high once more. So if we're kind of in this pocket right now where we need to get down below 64.5 or up above 69,000 in order to make a move in either direction on Bitcoin. So let's take a look at our favorite miners now. Start with CleanSpark. This is the daily. We had a really bad candle actually on the daily. This is a really terrible candle actually. And this is basically telling us that we will likely have further downside on Monday. So I don't like that candle one bit with that big long tail on the top and red on the bottom. That means it just fell all day and the bulls didn't even put up a fight. That's what that means. And that is brutal. And if we look at the weekly on this as well, that is also looking just bad. just bad. Look at this huge bearish engulfing candle, and this formation right here, which I can't draw because it'll bring back all my other drawings, but it was from March 18th, March 25th, and April 1st. Here, this 3-week formation right here, the fact that we had a green candle, another green candle with an ugly wick on top, kind of a blow off top, and then followed by a big engulfing red candle, that is very bad. We are very likely going to come back and test $15. I don't know if it will hold. This is a very bearish, very bearish formation. Actually, it's very similar to this formation right here. Right here, that was December 18th, 26th, and January 1st, this formation here, where we had two candles kind of moving up a little bit. This one was red, but it was moving up with a blow-off top. And then we had an engulfing red the next week, and then that was followed by 2 more weeks of just awful downward pressure. If that were to come right now, we would likely see the price come down to around the $10 to $11 range. Let's do a real quick, what percentage down did this move? So we had that big red one there. How much percentage down did it go? Kind of went here. It went down another 37%. So if we went down 37% from where we currently are, that would take us right down to about $10. So that is what we're looking at potentially if 15 cannot hold. 15 has been very strong. I'm not saying 15 is not going to hold, but if it doesn't, prepare for some pain in CleanSpark. This is a very bearish formation right now. Short term, long term, I'm very bullish on this. I'm talking about like the next 2 to 6 weeks. We could be seeing some pain on this, and then obviously after the halving, and after we start getting some reports as to how profitable they are after the halving, we're likely to see it skyrocket again. So don't start thinking that I think that this is going to zero or anything. I just think that there's going to be some pain in the coming weeks. Now, if Monday opens up in a big way, I'll change my tune immediately. But if it shows weakness on Monday at all, 15, here we come, and very likely 13. And if 13 doesn't hold, we're going all the way down to 11.30 to possibly even all the way down to $10 on CleanSpark. So I'm just mentally prepared for that to potentially be what happens here on this, given how the chart looks right now. We do have a 50 retracement on the RSI right now. We are currently at 50 on the RSI after being overbought. This is actually, so if we turn around here, it's going to turn around strong. But it is a dangerous place to be. Like, you are definitely doing some tightrope walking here down to $15. And if this turns to be out to be the reversal zone, which it has been in the past, going from overbought to the 50 on the RSI on the weekly, and then a very violent turnaround all the way back up. It could happen. It's happened before. It could be happening again. But question is, do you have the nerve to do it or not? I think I do, because I'm still holding all of mine. So maybe. And of course, this is not financial advice nor a suggestion to buy, sell, or hold any asset whatsoever. It is simply my analysis of the chart. Feel free to disagree with me in the comments. All right, let's move on to Mara. Mara, this is the weekly on Mara. It is basically exactly the same as CleanSpark. It's a very bearish formation. We are hanging out in a very highly traded part of Mara here around that 1980 zone right here. 1980 to $20 all the way down to about 1750. This is a very highly traded area. If we were to turn around here, I would not be super surprised. Let's see if there are some SMAs that we're coming in contact with. We're actually coming in contact with the 200-week SMA. So even though this is bullish, this red line here acts like a wall holding us up. It held us up before twice. It might hold us again. If this breaks right now, we get below this red line, we are coming down to, again, the next level of support for Mara. We are looking at 1366. And then below that, we're looking at about 1038 or so. Yeah, about 1038 on Mara if this red line cannot hold. So not great. The 50 SMA at $15 might catch us as well on Mara, but I wouldn't hold my breath on it if we got through the 200-week SMA. That would actually be pretty scary. So, and that would also ruin, this will very likely ruin our higher high, higher low formation on the weekly chart as well if that were to happen. So keep an eye out on this 200-week SMA on Mara and see if it holds. If we, again, if Monday opens up nicely, like we get a gap up and go sort of day on Monday, I might say, yeah, this was probably support and we're going to keep on charging higher from here. But if we show any weakness on Monday, I'm going to be just waiting to see what happens at this 200-week SMA on Mara. Let's take a look at RIOT. This RIOT weekly close was even uglier than the other two somehow. This is so bad. Like, it even engulfs the last. So this candle engulfed the last 3 weeks of candles, coming all the way down to 1020 where we close. And then at the lowest level, we actually wicked down below $10 on RIOT today. That is bad. That's bad. Now, the only thing that's good about this is we are lower on the chart than we are on Mara and on CleanSpark. We got through all this support back here, and we're sitting at the very, very bottom of that support on RIOT. If this does not turn around like Monday morning in the AM, we are likely coming down to $782 is the next level of like strong support. We do have some at about 872, and then yeah, again down at 778, and then below that at about $7-ish on RIOT. On the upside, we have resistance at every single one of these SMAs. The 5 at $12. The, which color is that? Is that orange? The 15, or is it the 20? Did I change it? The 20. The 20 or the 50 at 1255, and then the 20 at 1345, and then the 200, the big one, at 1598. When we finally conquer this 200-week SMA on RIOT at 1598, that's when we start charging up into the high 20s and 30s in a matter of days. But until that happens, we are probably going to visit $8 first, maybe $7 first. If we're really unlucky, we might even visit $6 again before we see that move up on RIOT. But it's going to come fast because once the halving occurs, like we're on a short time frame here. Once that occurs, we're going to start moving up with Bitcoin very likely. Of course, it's not financial advice, nor a suggestion to buy, sell, or hold any asset whatsoever. Now let's take a look at BitDigital. How did BitDigital do today? BitDigital, I'm actually not too concerned about BitDigital, even though a lot of this is really ugly. Like a lot of these SMAs are really close together. We are currently right on the 5-week SMA here at 241. Below us, we have tons of support at $2. So really, we could drop another 40 cents. Realistically, I don't know if we will do that. And if we get above last week's candle at 297, if we get up above 297, there's this huge gap all the way up to 520 on this chart. So the downside is like 40 cents, whereas the upside is measured in dollars. Like not so bad in relation to that. Now, it's not a great chart. It's still bearish. It still is definitely bearish looking in terms of it's an engulfing red. It's very ugly. It's not as ugly as CleanSpark and Mara, and we are trading much closer to the bottom of the chart than the top of the chart like those other two. But we do have strong resistance here at 286 and $3 that we need to get through. And then we've got this big gap up to the 200 SMA on BitDigital. So small downside, big upside on that one. Bitfarms is sort of in the middle, It had a pretty ugly candle. I would call this, yes, engulfing, but it didn't get past this wick here from last week, which is at 205. $2 is holding quite strong on Bitfarms. I am somewhat convinced that it might be able to continue to hold that. If it does not, though, we're coming down probably to the 50 SMA or near it at a 177, where we'll likely get some support, start crawling back up again. One thing I do feel good about, though, is that on the volume here for the weekly on Bitfarms, it has been dropping every week pretty much, except for last week where it ticked up a little bit, but overall the trend is down on volume. And as it falls on lowering volume, looks like we're likely to flatten out and potentially start crawling back up again. So I'm not too concerned about that. So that's it for my favorite Bitcoin miners. Let's take a look at some of the plays that I've been talking about this week as well. So the plays I've been talking about this week, one was Tesla. Tesla, let's go to the daily for this actually, not the weekly. Ooh, that's a big volume here on the down on this week. That's brutal. Anyways, let's go to the day. The daily on this. So yesterday gave us a pretty big hint that today was going to be bad for Tesla. You can see this big ugly candle here with this long wick on the top, tiny little body near the bottom. This was foreshadowing that today was going to be bad, especially since we went up over the 20-day SMA and then came back down and closed underneath the 5-day SMA with that big tail on top there. This was a foreshadow that today was going to be quite bad on Tesla. And one thing that you will notice is if I turn on my drawings again, Tesla has a very strong support at 160. You can see it's tested it once, twice, 3 times, and each time it bounced hard off of that level. Someone does not want Tesla to go below $160. So if it does, if it manages to get below $160, we are very likely coming down to support around 154 will be our first stop. Well, 155 will be our first stop. And then our next stop after that, maybe 152 if we're lucky, but if neither of those hold, 146 at the gap fill is waiting for us to catch us, maybe before we potentially go even further. If we go further, 136. So it's like 154 under 160, 154, 152, 146, and then eventually potentially 136 if 146 doesn't catch us. So we're looking for that right now. And now it might not go down there. It might test 160 one more time and then just bounce off of it. But usually third time's the charm. And can we count this as 2? Maybe, but you could also count that as 1 if you really we're trying to finesse it a bit. I do think if it comes down to 160 again, then it'll very likely break it. And we'll see the 50s, maybe even high 40s before we turn around again. And to mark that we have turned around again, I will want to see this little green line cross up and above the yellow line, which it's done once, and that was a fake out breakout, and we came crashing down. But of course, that was also on negative volume, so that was pretty easy to spot as a fake out. I want to see a green bar, kind of like these three here, but with that green line coming up and above the yellow line here, and trading above it for a day or two. And then I'd say, yeah, maybe we're turning around on Tesla. What about NVIDIA? NVIDIA closed down. Okay, we are in this aggressive downward channel on NVIDIA right now. We closed beneath the 20 and 5-day SMAs 2 days in a row. This is a doji candle, small body doji candle. We came down. This has pretty strong support at 860, and we went up to right here 884 where we got rejected. Now, if we open up weak on Monday, I'm looking for this 860 to break. If that breaks, I'm looking for about 823 to fill this gap over here from March 1st. That's what I'm looking for. Now, by that time, this 50 SMA might catch up to us and catch us around the 820 level, and then we'll use that as a springboard like I think we have in the past. Yep, used it before like that in the past. It'll look something like this right here. That happened back uh, from November 20th until December 4th, where we came down very aggressively, hit the 50, hung out there for 3, 4, 5, 6, 7 days, and then launched off of it a bit. I mean, that was a move from 460 to $500, and then we came down, nearly touched it one more time, just had to give it a little confirmation tap, and then launched, absolutely launched from there. So I'm looking for something similar up here. I want to see this kind of come down, at least get close to the 50 SMA, maybe even the 823, and then from there start taking off and take out $1,000, maybe even go up to $1,200. I don't know. But I don't think that this run is over yet, but I do think that this is that correction that is needed. Let's see from the all-time highs here. Well, actually, let's do from the swing high. From the swing high down to 823, that would be about a 15% correction. That's pretty normal. If we went down to the 50, that wouldn't even be a 20% correction. That's a very normal move on the way up for those ebbs and flows of a stock. So honestly, that's a pretty normal move. If it came down to 823, that would be very average for a pullback before charging back up once more. So keep an eye out on that. I think right now, how far have we gone? 10%? Right now from the swing high? Yeah, we're about 11%. So even if we turned around right here and ran back up, that would still be pretty average pullback, a pretty average pullback. So that's why I haven't really done anything with this yet, but April is known as the worst month of the year for chips stocks. So I do have this on my radar. I am watching for it to give me that 15, 14, 15, maybe 16% downside from that swing high this month, since it is seasonally a bad month for chip makers. The other one I want to talk about today is Square. Not Square, it's Block. I keep calling it Square. It used to be Square, now it's Block. Okay, Block. Yesterday we had a day that was down 6%. Today we had an update of 3.27%. I actually played that to the upside a little bit today and made a tiny bit of money. Not tons, but I do think that we almost came to my target here for about $71. We actually only came down to about 72.86, which is a little further to tap my box there and potentially run up. But I do think that eventually we will bleed down to this box down here at $70, maybe even 68 before continuing on up in an aggressive way after the halving. I think that after the Bitcoin halving, their Bitcoin treasury will come into play and factor on their balance sheet, just like it does for the Bitcoin miners. It makes them look very profitable, just like it does for some other companies that hold Bitcoin on their balance sheet, like, I don't know, MicroStrategy. I do think that that will come into play, and it might even come to play here because they have their earnings date on May 2nd. And once they show, if we get some big appreciation, like let's say Bitcoin's trading at 80, 90, $100,000 on May 2nd, or whenever the report was written for this day, this could make their balance sheet look absolutely amazing and send them absolutely flying up if that's the case. So keep an eye on this one. Just watch it. For right now, I'm just watching it. I did play it a little bit today, but I didn't put anything long on it today. I just kind of did a very, small call option on it. I played it for like an hour, and then I let it go when it made a little bit of money. But I am watching it for a bigger move, more for like a year or longer on this stock. So, and I think that it will be a Bitcoin play. One other thing, TMF. did very, very, very badly today because of that jobs number. We were actually down 4% today. We closed under $50, so that is bad. This candle, just like with CleanSpark's candle today, this is an exceptionally ugly, ugly, ugly candle. I do think that that is foreshadowing that we are likely to see this come down into the mid to low 40s in the next couple of weeks, maybe even come down and fill this gap down here at about $42 sometime in the next couple of weeks, especially if we don't get any good news about an actual rate cut coming through. This thing will continue to just suffer until a rate cut is confirmed and coming, and definitely for sure not going to be canceled like this previous one has basically been due to some economic data and some of the words from the feds. So that's what I've got for you today. Please like, comment, and subscribe, and have a profitable day.